When I was first getting into investing, I was embarrassed to actually ask some of the obvious or foundational questions that I had out loud. And if that's how you feel right now and you're wanting clarity on some of the finance and investing basics, this video is breaking down one of the most foundational questions. What is a stock? Stocks. An idea that we feel like we generally know what they mean, but they're a lot of times more associated with that one friend who happens to have a lot of savings, and it's somehow making what seems like a boatload of money on GameStop or meme stocks, or you imagine a whole bunch of guys with like the last name Rockefeller sitting around in a room, smoking cigars, talking about stocks, and the stocks are up, the stocks are down. But what are they really? Simply put, stocks are a way to build wealth. They're an investment that means you own a share in the company that issued that stock. So for example, I've got this friend, Johnny Artavanis. You probably don't know him, but he loves lululemon. And specifically, he loves their ABC pants. We're not going to be talking about what ABC stands for. You can Google it. But he loves their ABC pants, and he thinks that Lululemon is the future of men's wear. Stretchy pants, they're the best. And so Johnny wants to have some skin in the game and be able to financially gain from what he believes will be the rise of Lululemon and their stretchy, comfortable takeover of men's clothing. And to do this, he's going to buy stock in their company. Another way of saying that is that he would then go and buy a share of Lululemon or shares of Lululemon. You see, when Lululemon was just an itty bitty company and they were growing, they decided that they wanted to raise money from not just a private room of investors, right? The Rockefellers and venture capitalists smoking their cigars, but they wanted to reach a much larger group of people, basically anyone in the world who has money. And so they decided to open up their company to the public investors of the world. That's the me's and the you's. To do this, they took the value of their company and divided it into thousands of units that they call shares that investors can buy. Let's say that when they actually went public, they saw the whole value of their company as a whole $100. It's an example, just keep tracking. And they divided that into $101 shares. Yes, Lululemon is worth $100 whole dollars, and they divided it into $101 shares. So if Johnny wanted to own Lululemon, he would buy some of those shares. And if he was to buy $10 worth of those shares, that's 100 divided by 10, he would own 10% of Lululemon. I know, galaxy braining, a ton of math here. But now currently, at this time, Lululemon is worth an entire 50 billion, right? With a big old B right there, billion, and they have millions of shares that public investors can buy. But you can see how the example I gave you before works, just with a lot more shares and a lot more dollars. So when you own a company's stock, you own a share, a percentage of that company. Now, we're probably not like those big venture capitalists or the Rockefellers once again, who own a large percentage of these businesses, but you can still tag along with the company and say, I want to be a part of that success, that explosive growth that they are going to have. What are some companies or products that you use every day? If a couple brands directly come into your mind that you're constantly interacting with, always using, that might be a solid indicator that you should join that company on the rise of their growing business by buying a share of that company. So in conclusion, a stock is an ownership share that you have in a public company. And when you own it, you really own a percentage of that company. The value will rise or fall based on how that company actually performs. There you have it. What is a stock? Now you don't have to feel embarrassed about one of finance's key foundational topics. Subscribe to the channel if you want to learn more lessons like this one.